as you go along as usual, just pop them into the chat box. Now, what I have for you is pound USD on the 15-minute, 15-minute chart. We're going to look on the 2nd of June and what took place. And the idea is to just share with you some tools that you will see actually work pretty consistently in the market as you go through the market. So if you can apply these and use this, it definitely will enhance your profitability and your ability to have an insight into what the market is doing. Tomorrow, I'm also doing the 1-hour mentorship breakout coaching, and I will use another currency, USD yen, just to take you through some other thoughts. And on the 26th of July, if I am correct, I have a course, which I'm hoping you attend, because in that course, I will unpack a strategy that I think will, well, not I think will definitely help you make money going forward. So Asian session, I mean, this is absolutely fantastic. And I'd said to myself, I'm just going to look at beginning of June and work my way through. And 1st of June is absolutely fantastic in terms of you guys, or most of the guys on the chat, in the video, who trade Asian session market, because the market moves at any given time. And this is a classic example. Good rewards from Asian session all the way through to the US session, bit of a trading range and some opportunities way back later on into the US session. So if you had been in the market right from here, and you're trading from when the market's open, and you're trying to find ways to get into the market, immediately you've got to be asking yourself the question, am I in a trading range or am I in a trend? If I'm in a trading range, I want to wait to get out of the trading range and trade. If I'm in a trend already, if you came into the market anyway in here, I want to find ways to get into the market. So if we can get into binary decision making, if it's not this, then it's that, it makes it much easier. It removes a lot of clutter and confusion from our thinking, and it just accelerates, our grasp of what is taking place. That's why I enjoy just talking to you guys, because kind of fast forward in your learning out of all my experience. So trading range, probably would have waited to say, well, if there's a trading range, let me see if I can get out of that trading range. And, there is a trading range right at the open. Okay. And nothing for you to do here until we start to break out of that. There we are breaking out of the trading range. If you were to take that trade, and it's absolutely perfect to do that. But the key thing about taking any trade is, where does the stop go? The stop always has to go in the correct place. Okay. My particular way of trading is, I'm looking for swings. I'm trying to take trades that I can hold on to for as long as possible and make money that way. I don't like scalping. Scalping is a pretty valid way of trading. It's just too energy consuming for me, too much happening. I don't enjoy my trading as a scalper, so I don't scalp. I can scalp out of trades, because trades, don't always go your way, right? There's no 100% certainty. If there was 100% certainty, then, there'll be no one taking the other side of the market. So I can scalp out of trades when things don't go my way, but I don't like to scalp in to trades. I just prefer to take it nice and easy. So breaking out of that, then, stop has to be at the bottom of the trading range. And that's where you put the stop. And the reason you take in that trade is, at the very least, as a swing trader trading intraday, you think, well, I should get at least 1-to-1. Okay, based on what I'm seeing, breaking out of a trade, breaking out of a range, there is the range. Okay, there is a range. Yeah, there is the range. So I'm hoping that I get 1-to-1, at least get to 1-to-1, the height of the trading range sloping upwards. So happy to take a trade, put the stop there, and I can manage my trade. And we got to the 1-to-1. So if you're going away, you set your take profit just before the 1-to-1. If you're staying in the market like I do, because this is my job, right? It's my craft. I stay in the market for as long as I can. unless family duty calls are in the market quite a bit. So you stay in the market and you look to optimize your trades. Now, once you've hit it and you say, well, gee, how do I optimize my trade? Well, we've got to the high of the trading range. You got to make the assumption if the bulls are strong, then of course, because they got a big breakout candle, they want to try and go for a measured move, 1-to-1 of that breakout candle. So once you see something like that, end of the breakout, beginning of the breakout, okay, I'm blocking it there, and it's supposed to be there. There is a measured move. So you're thinking, okay, I'm going to hold on to my trade. I'm going to tighten my stop, pull my stop up, maybe to 50% of that breakout. 50% level is a valid hit and resistance level. All these measured moves are showing you hidden levels of resistance and support. The computers see them because the computers, put them there. They know it's there, and that's why market reacts to there. So you've got to see them as you're trading so you can make decisions as well. 1-to-1 measured move, 50% midpoint is pretty perfect. It might get tested. So if you're going to stay, pull your stop up to there. If you want to get out and say, I've hit my level and I might just get a big bear breakout, and I'm not going to hang around for that, George. Thank you very much. Or just tighten your stop to beneath that. Get stopped out, perfectly fine. You've made your profit. And then you wait to see what else happens. Now, good for the bears and the bulls resume. Now, as the bulls are resuming, another pattern that you got to be thinking through, another price action pattern that you got to kind of keep these things in mind. Measured move, 50% pullback, leg one equals leg two, first leg equals the second leg. So bulls have put the first leg there in that breakout. Okay, so there's the first leg, and there is the end of the pullback there. I'm just going to move it here so we can see it. I'm measuring the first leg of the breakout from the low to the high of the breakout there, and the pullback where the breakout ends, that level. And you are in here, you think, well, I wonder if we'll get there. If we get there, that's fantastic. So if I want to take another trade, maybe you want to take this because, it's like a tight range. You want to wait a little bit, then you see a bull candle. If you want to take that, your stop has to be here, beneath that lower high, that's higher low rather. That's the perfect place to put your stop at these lows. But there's a measured move up here. You also know there's a leg one pullback, leg two here. So again, if you're gonna go away, you need to put your take profit just beneath this level. If you're not going to go away, you stay and you manage your trade. So if you're going to take that, bearing in mind what you've seen as hidden levels, where the market might react before it gets up into the sky, you take a trade, you put your stop here, and then you manage your trade. When you see that, you can exit if you want, or you can, let's put it in so that you can just see it. There are layers and layers of decisions that you got to make as a trader, which is what makes it seem pretty interesting, right? This business. And you bring whoever you are into the business. Whoever you are. Am I an aggressive trader? Am I a more relaxed trader? They're like high energy scalp in and out all day. Take 10 trades within this. Do I want to take one trade and manage it? That all depends on who you are and your personality. But the structures of the market don't change. So you're taking that trade. There is a little trading range we are breaking out of. So you can clearly see we are breaking out of this little trading range. And that's the measured move of the trading range. It doesn't matter if a trading range is big, and we'll talk about that like that, or it's small, or it's sloping or flat. The measured move is the measured move. So okay, I'm going to take that. I have the measured move of the trading range breaking out here. I have my leg one, leg two here. I have the measured move of the breakout. It's just a cluster of stuff. Resistance is just layered and layered and layered there. but I'm willing to take a trade because I know I'm going to manage it, right? So I put my stop here, take a trade, fantastic. I pull my stop to here. So I've taken out a pretty big chunk of the risk. And then I wait to see, we might get up there, we might go sideways and then accelerate up. But we come back, I get stopped out just for break even. Perfectly fine. I made the decision. If you didn't want all of that because of what you can see, and you've taken the trade, as a breakout trade here, or you've taken a trade here, that is perfectly fine. So you could have taken, let's put it in. That first trade we spoke about here, the assumptions of what we did. You saw the breakout at that level. If you want to think the market's going to go there, you want to take a trade, a breakout trade above that level, it wouldn't have been triggered. But let's assume, you just bought the market, and that you can do because you think it's going to go there and you manage your trade, you get up there, you take that trade and, you get all the levels there as well. You've got to manage your trades. So you could just take one trade and wait, or take one trade and wait, or take all of them and manage them. Depends also not just on or everything's about you, right? On the kind of trader you are, how aggressive you are, but also what is your maximum risk that you put in the market? How much are you prepared to lose? So, if you have a maximum risk, maximum drawdown of whatever, 1%, 2%, 3% a day, you don't want to put all of it in all the trades, right? Break it up, maybe put 1% here, another one there. It's another discussion for later. Okay. So still in here, and now we hit all of those levels. Does that mean that the bull trend is finished? At that point, the bulls have reached their levels of satisfaction. Okay, so anything can happen. We can start to sell all the way down. So you think maybe at this stage, we could sell all the way down. I want to get into the market if we're going to short, but I've got to see evidence that the bears are taking control of the market. And where would the evidence be? If you just look to the left, well, that big breakout candle, okay, that was good strength by the bulls and followed through. So the bears are strong. They're going to have to do enough to convince me that the bulls who created this are done with. Now, there's the bottom of the breakout. So if you have a bull breakout, you can mark the bottom of it. If we don't have here, let's assume we had a big bear breakout somewhere down here, you mark the high of the bear breakout. Okay, so all of this you mark beforehand, right? Like all these measured moves, they must be in place before the market gets there. So when they get there, your mind is ready to think about it. So you're waiting to sell, and just the bears just need to give me strength, maybe get down here and sell, get to new lows, but we don't. We barely even get or not barely, we kind of retrace at 50%. Remember I said 50% is a key level. There's 50% midpoint of the breakout. Failed to break out beneath that. We didn't get out beneath this low. So you can't be selling here. Okay. Scalper may want to sell, but we're not talking scalping, but we know they may want to sell because they know how to manage things differently. So we want to just enjoy ourselves and not do that. Okay. So now we get that. Market starts to go up again. You have a trading range that is forming. Now, when you have a trading range that is forming and you have patterns within the range that you can trade, what is the most important thing? The last thing that you have to tick before you jump into the trade? Well, it's simply, can I make money if I jump into the trade, into the range from the bottom of the range going up? Can I make money if I sell? Now we have a range. We didn't have this high before. Now we have a high. If we get up here and the bears do this, now we're in a range, highs, lows. Can I make money going down before I get to the end of it? Okay, so it all depends on where you put in your stop. So if you want to buy here, because you say, well, we're in a range, I have a high, low, bears have failed, happy to jump in. Like here, we had a range, but we're breaking out to go into the measured move. Here, I have a range. I can clearly see now the extreme of the range. So if I want to get in here, it's going to be where you put your stop. We're not scalping, so we don't put tight stop. Stop is going to be down here. So if I put a stop here, do I have the chance to make money before we get to the top of the range? Because now I can clearly see that level. you can, of course, do that. And stop goes where stop goes. Okay, so we're buying above here. Don't put a stop here. That's just going to float. I mean, you were concerned here about if the bears are strong enough to break out beneath here. So don't just let your stop float. So your stop is going to come down here. And of course, if you do that and your stop is down here, kind of say, well, there's enough time for me to manage my trade, get, through to break even, whatever the case may be. So you take the trade and you manage your trade up. And when you get here, okay, I can see there's questions popping up. I will allow time shortly. So there's the top of the trading range. Okay, get up here. If you're going away, same story like here. Put your take profit a little bit below and go away. If you come back, you've managed your trade. By the way, if you're gonna go away, don't take a trade and just go. Take a trade and manage your stop. At least take some risk off, break even, and then go away. If you're so pressed for time that you just want to take the trade and go, do not take the trade. It is not necessary. The market will be there when you come back. It will be there tomorrow, next week, always going to be there. Okay, so there we are. Now, when you get here, same thinking, guys. We've had 3 trading ranges. Tight one here, upward sloping. We saw the measured move. We've had a small range here. The market's gone sideways in 2, 3 candles. We've seen the measured move. Now we have a bigger trading range here. So where is the market likely to go? Likely to go. Okay, there is a high of the trading range. There is a bottom of the trading range. And you here, same thing. I like this example. Remember, I'm always saying, if you're going away, take profit. If you're not, stay. Like I'm in the market, I'm staying. I'm not going to just take profits. And they say, oh my goodness, should I get back in again? I'm going to trail my stop up because I don't know what can happen at that level. Right. So instead of the bears, they had the opportunity to create a double top. The bulls accelerated up. And now I'm saying, okay, took the trade somewhere within here. Now we might just get up to here. And the same decision-making process that we had here. Okay. I have a breakout. What do? Do I sit back and do nothing? Perfectly fine if you're already in a trade. Maybe you didn't take a trade, but now you're there. What are you going to do? You can see the hidden level, which is this measured move there. Okay, I've got enough time. I'm going to take the trade. Remember, this is a 15-minute, take the trade, boom, in. I move my stop up. Then I'm going to go away because I now put my take profit there just below. Or I'm going to stay and manage it and see what happens when you get there. Okay, bulls got here. Bears try to make it fail. Doji, bearish candle. I'm not even going to take the chance with that particular trade. I'm going to wait because of fear. Let me see what happens. Bang, we get in there. And now we start to go sideways after that. So there's a lot more that we can unpack. I want to look at the questions that we have. Then I can list you guys. So tomorrow, I'm just going to pick something on the yen in the mentorship. Prepare your questions. And I can always look at other charts. And tomorrow, I'm in the market. It's a Monday. If I'm in a trade, I will show you, the trades that I'm in as well, question and answer. And then we prepare for the course. In the course, as I said to you guys earlier on, I'm going to be showing you a particular strategy that I trade. And the way that I trade, as George, which you're absolutely going to love. As a trader, you got to kind of fit your trading into your strengths, right? So you learn price action trading, you graduate into it, you master it, you become good at it. And then what? You got to find what works for you. So I have found a way after many trials that works for me with my background as a chartered accountant, as a doctor in business leadership. But it's so simple that I can teach you and show it to you. And maybe it might become the way that you trade. But also out of all of this stuff, you may actually say, I'm a scalper, I can use this. Or I'm not, I just want to wait for breakouts. Or I can do X, Y, Z. So that's why I'm showing you all of this and you can decide. Let's have a look at a question if there is. Do all currency pairs get charged overnight charges? if we hold the trade over several days. Now, you're not going to get charged, right? There's swaps depending on which currency your account is in versus the currency that you trade in. You make some money here and there. In my view, it's minimal. Don't even stress about, you don't build a strategy on, well, I'm trading in Sing dollar, I'm trading the yen or the pound, I'm gonna make a few swaps. It's minuscule. Don't worry about it. And if you get charged or not charged, perfectly fine. Who cares? It's minimal. Won't make a difference. Now, here's what I gotta say. If you are trading intraday, and by intraday, I basically not trade 5 minutes, 15 minutes at best. But if you trade, I think probably up to the hourly, I would not hold any trades overnight, because all sorts of weird things happen. You get gap downs like this. Sometimes you get a gap up and pull back. If you trade in intraday, it's problematic. Lose money, make money accidentally. Don't do that. Close your trades, go to sleep, bang, or whatever, or wait for, depending where you are in terms of time zone, wait for the market to transition and then get back in the market. If you're trading on the daily chart and perhaps the 4 hours, doesn't matter. Just hold it through. Okay. Looks like Fibonacci MA confluence area. Okay, Fibonacci, I don't know what MA is. It's a moving average. I'm not sure. But what Fibonacci MA confluence areas. What I can tell you is that the only thing I use on Fibonacci, so that we're absolutely clear, there is a ton of levels on Fibonacci, right? So if you were to, okay, I'm not going to take you and explain that to you because I think you know how to do it. But in any case, the only thing I'm interested in using the Mr. Fibonacci's tool, because it works for me, and I want to use it to find these measured moves, equidistance, breakout, where is the one-to-one level. That Fibonacci tool, if you said it correctly, is fantastic. I also want to use it like I did here. If I have a first leg and a pullback, where is the equidistance? So there's the first leg, there's a pullback. From the pullback to where it is likely to end, the same distance as the first leg, right? So that's what I'm using for. That's why I've only got 0, 100, 200. Then I'm interested in midpoint. Midpoint I used when there's a big breakout like this. So assume I took this trade and I'm wondering, what do I do with my stop? Okay, there is the midpoint of the breakout level. So that actual, that candle on its own, the measured move is almost the measured move of that trading range. But I'm interested in the midpoint. So I've taken it and okay, I want to drag my stop up, put my stop here. I see a next candle, I can put my stop here, or I can also, because I can see this level and I just don't want to give away my profits. What's the midpoint of that next breakout? And you can see that was perfectly tested. So just put it below that level. And then I keep trailing my stop up until I get stopped out or with another breakout candle. Next easiest place is to pull my stop to midpoint, and then eventually I get stopped out at that level. All right, guys, I hope you've enjoyed this. So tomorrow I'll use the yen in the mentorship coaching. And as I said, if there's trades taking place, I'm going to take the trades. If you are in a trade, you can ask me a question, or if you want to take a trade, you can ask a question. Otherwise, we just keep it focused. Sam, thank you very much for hosting. Absolutely brilliant.